It takes a long time for these sorts of revolutions to kind of take hold in the economy. You think back to the 90s and how long it was after the NASDAQ began to shoot up until the productivity numbers actually showed it. So I think at the moment, productivity is okay, but not great. And, you know, the question is, when and by how much might it accelerate going forward?
The split between hard and soft data, Michael McKee's completely focused on this right now. One shows oomph, the other not. Which is right?
Well, I think at this point, generally, I'm a big believer in the hard data. For example, I think that the correlation between consumer confidence and consumer spending is pretty weak over time. But when things are moving fast, sometimes the soft data is telling you something in a more timely manner than the hard data. And I think right now, we're just waiting for the hammer to drop from the impact of tariffs. And you can see that in the soft data. You haven't seen it yet in the hard data. I'm very interested to see what the May data look like because I have to say I was surprised at how little, really almost not at all, the April hard data was affected by tariffs. We had, you know, the employment number was good, retail sales was fine, the CPI was normal. So I am expecting to see some of that wash through in the May data.
Are you concerned about inflation? Are you concerned about slowing economic growth associated with the tariffs? Or are they just so, I don't know. I mean, they're out there and there are some real tariffs on real goods and services. How do you expect that to flow through?
Well, my hope is that on both counts, both for inflation and for growth, that the impact will be mostly temporary. Okay. We'll see. I mean, obviously, all of this remains to be seen at this point. But certainly, I think for the Fed, the key question is, I think, on the inflation side. They're really focused on how long the inflation impetus lasts.
So what's our Federal Reserve to do, if anything, as a result of some of this uncertainty?
Well, right now, I think they're, you know, as they've said, they're being patient. They're in wait and see mode. I think they feel like they're in a relatively good position coming into the, you know, before any of the tariff stuff began. The idea was, okay, we're modestly restrictive, and that's where we want to be because inflation is above our target. We need to see more progress on inflation. That whole narrative was interrupted by the tariff situation, and now, you know, we'll see how long that inflation data continues to run high.
This is what surveillance is about. We got Blanchard coming on Stanley Fisher with all that excellence of academic theory and thinking about where we're going. You are a definitive acclaimed market economist out of Washington and Lee. Do the models that Blanchard and Fisher invented, codified, and moved forward, are they working today? Or is the Fed and others, are we just making it up as we go?
Well, I think certainly the models provide a good backdrop on how to interpret things, but there's always something new, right? Every cycle, every episode.
What's the new right now? Technology?
Well, I think it's the uncertainty around policy, right? In the short term, you know, in the long run, as you say, I mean, technology is a big question, but I think in the near term, it's the uncertainty around policy and how that's likely to impact the economy.